Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Here on the main channel, we are doing applied material earnings. That's coming up in just a few moments' time, in fact, 15 minutes. On the extra channel, we are covering Despegar earnings. So there are two earnings at once going on here. Let me just check all the links are working correctly. We've got 15 minutes to go, two earnings at once. So welcome everybody to both of our channels. Let me make sure that everything is fine and audios are all good for everybody. Just bear with me. Got a few last minute checks to do. We've got 15 minutes to go and we're covering two earnings. We've also got polls running, which you can take part on X. I will give you the links in a few moments. So just please bear with us. I will give you those in a few moments. We're just making a few alterations here. I have this stock. Congratulations, MARK. Welcome to the show. Lovely to have you here. Lovely to have you here. Welcome. We're just about to start. We've got 15 minutes to go. We're running two broadcasts at once. On the extra channel, we are covering another stock. And here on the main channel, we're covering applied materials. We're running two at the same time. So you can choose which you want. Some of the Lucas A's watch both, and then they rewind them and all the rest of it. Watch the replays. So we're just making sure everything is up to standard. We've got 13 minutes to go. You are in the right place. Okay, looking good. Looking good. Over here on over there on the extra channel, people are watching Despegar. Very first time we've covered this stock, but should be very interesting. Welcome to all of you. We've got about 12 minutes to go. Here on the main channel, we are covering applied materials. Welcome to all of you. Just checking through. We've got all our polls running. I'll give you all the links for the polls in a minute if you want to check it out. I shall do that in a moment. We're just going through all our settings, making sure we are good. Everything's looking good. I'm going to check the audio feeds coming from both of our earnings in a moment as we go through all our feeds. Let's come back into the extra channel again. Okay, here we go. Let's check the content here. Live, we are running. Let me refresh that screen there. Okay, here we go. Let me check this. We should only have one running. Oh, we seem to have two running at once. I don't know how we've quite got two. Let me end that one then. Not quite sure how we got two running at once. Let me make some alterations. Switch account. Make sure we're good. So we've got just 10 minutes to go. Yes, it's still showing two streaming at once. We want to end this stream. Okay, end that one. Okay, that's ended that. We had two streams running at once. That was confusing some people. That's taken care of. Applied materials here on the main channel and Despegar on the extra channel. Just about to start. I've got 10 minutes to go now before the call begins. I've got the feeds all set up. We're all looking good. Let's make sure that's fine. It is. That's all fine. Stream settings all good there. Okay, we're all good there. Fantastic. We're all looking good. All right, marvelous. Let me come back to here. All right, now then, let me bring it up on the screen. all the different feeds from our companies that we are covering tonight. Here is information for applied materials. We've got the general screen, we've got the advanced chart, we've got the news. I will tell you now if they've beaten or missed. We are running a poll. I will give you that link in a moment. The deal with the stock is we have a beat, a very large beat actually. 202, we've beaten, we are 212, a 10 cents beat. That's very, very good indeed. Congratulations to them. Here is the call. Let me check the audio. There it is. There's the call. We're waiting for the call to begin, so we're all set there. Over on the extra channel, we're covering Desberger. You are in the right place. Stay right where you are. That all looks good. Let me go over there now and check the audio over there. Here we go. Desberger. Let's bring up the call. Let's refresh the screen. Here we go. Let's unmute. That's all looking good. Okay, that's all looking good. Let's check the levels. Okay, that's all looking good for Desberger. Very good indeed. Okay, we're all set now. All earnings are ready to go. We've got 8 minutes left now. If you've just tuned in, please consider subscribing to the channel and please tap the like button as well. That would be great. Martin, come back to AMAT. Yes, I'm not going anywhere. I'm here on the main channel and Desberger is on the extra channel. We are running 2 at the same time. I'm not leaving you at all. We're going to look at the information and we're going to review the stock as well. So this is what's going on live right now on the extra channel. Let me now give you some of these links I was just speaking to you about. First of all, this is Desberger, so D-S-P-E-R-G, Desberger earnings on extra. Okay, let me just do that. So I've got the link here if you are interested. I will pin that to the top. So there you go. It's coming now to the top. And I shall give everybody on the extra channel AMAT earnings. Let me change over here. Okay, AMAT earnings is coming in now. Very busy night tonight. AMAT earnings. There you go. AMAT earnings is happening on the main channel, so you can choose what you like. Let me switch back. Marvelous. I think we're all good. So we got 30 people tuned in tonight to DESP on the extra channel. And here on the main channel, we have 73. So there you go. But remember, the main channel is 1,000,000 times bigger than the extra channel. So got a very good audience tonight on there. Now let me go and check the studio. Bear with me. Okay, we're all good. Everything's good. Let's have a look here. So let's have a look at my overall portfolio. This is my portfolio. Beating the market again today. I'm up 3.3%. As you can see, I've got an all-time high at 107,647. I started with just $5,000. And you can see for yourself where I am, what's going on. But here on the main channel, we're doing applied materials. Now then, I'm going to give you the link now to X. Here is my X link. My polls are running, whether it's a buy, hold, or sell. Let me give you the X polls. Here we go. There it is. Go and vote. Let me go over now to the extra channel and give you the X polls as well. We've got polls on all of the earnings for today and tomorrow morning. There you go. There are the X polls. Please go and vote on that. Let's read all your comments. Is this the link for the extra channel, Vaz, or the main channel? Well, you're already on the extra channel, so you don't need the link, do you? Vaz, it's a link to the main channel. There wouldn't be much point giving you a link to where you already are. That link takes you to the main channel for AMAT earnings. You are watching DESP. It's in the thumbnail and in the title of the video. All right. What about the comments here? The World's Got Talent, AMAT reported over 23 minutes ago. Seems bad news. Well, they haven't started the call yet. The call starts in 3 minutes, so the call hasn't begun yet. We know they've reported, but this is the earnings call. Seems bad news for Intel. What was the report? Who knows? For Matt, well, I do. I'm looking at it right now, but we're about to start the call. It has beaten. Yes, it has indeed. HRB was 189 versus estimate of 174. No, that's not quite accurate. It was two. Here is the actual numbers you're looking for. It was $2.02 per share estimated, and it was $2.12, a very comfortable beat indeed. Things are very nice there with applied materials tonight. And there it is. Right, the earnings call on both events is just 3 minutes away. We do expect the earnings to be 1 or 2 minutes late. They always are. I don't know why, just the way it is. But we are all good. Applied materials, manufacturing equipment, service and software for the semiconductor industry. And we will be looking at the charts, not the charts, I beg your pardon, the fundamentals throughout the call as well. I'll give you a little taste of what we got here over on the extra channel. You've got the chart on the screen, and if there's any further information, I will bring it to you as well. But here are the latest numbers for AMAT. Here we go. Applied materials. As you can see, the revenue is growing all the time. Operating income is growing all the time. Net income is up. Financing cash flow down slightly. Investing cash flow down 10%. The balance sheet, 31.9 billion. Liabilities, 13.8. We'll do more of that later, but the core is about to start. Gross margin is up. Operating margin is up. If you do like my software that I have, you can all access it. My members can access all of my software for free. Let me give you the Alpha Spread link. It's a service that anyone can use for free, or if you want the premium service, my membership will give you a discount, which makes the membership to me completely free. Here is Alpha Spread in the chat. I'll also give it to everybody on Extra. Here is the Alpha Spread, a brand new service that was launched today. You can now get Seeking Alpha with my referral for $25 off, and that's the best deal you can possibly get. I would not do a deal otherwise with them. And you get a free trial. You can't get that without my link either. This is it. I'll put it in the extra channel as well. There you go. Extra channel, guys. I'm going to give it to you as well. Seeking Alpha. I launched it. I think it was last night I launched that. But it's a very, very good deal. You can get a free trial. You might as well try it. And $25 off as well. Pretty good, right? Okay, here we go. 1 minute to go. We're about to start the call. It might be 1 or 2 minutes late, so please bear with me. Please tap the like button and share this out to more people. As we get to 100, YouTube will start to suggest the video out and more people will learn about the stock. Okay, here we go. We're listening in now to Applied Materials and Despegar on our extra channel. Here we go.
Earnings conference call. During the presentation, all participants
Okay, we're starting the earnings call now. Everybody on the main channel, you are listening to Applied Materials. Everybody on the extra channel, you are hearing it for a moment. As soon as your call starts, I will go quiet, mute myself, and bring up your call. Please stand by on extra.
Quarter of fiscal 2024 earnings call. Joining me are Gary Dickerson, our President and CEO, and Bryce Hill, our Chief Financial Officer. Before we begin, I'd like to remind you that today's call contains forward-looking statements which are subject to risks and uncertainties that could cause our actual results to differ. Information concerning the risks and uncertainties is contained in Applied's most recent Form 10-Q filing with the SEC. Today's call also includes non-GAAP financial measures. Reconciliations to GAAP measures are found in today's earnings press release and in our quarterly earnings materials, which are available on our website at ir.appliedmaterials.com. And with that introduction, I'd like to turn the call over to Gary Dickerson.
Thanks, Mike. With record revenues in our third quarter and earnings toward the high end of our guided range, Applied Materials continues to deliver strong results in 2024. Secular trends are growing our available market, and our unique and connected portfolio of capabilities, products, and services positions us to outperform the industry over the longer term. At our recent investor event at Semicon West, leaders from our semiconductor business shared their perspective on the powerful, multi-decade technology trends driving the industry forward and explained the role Applied is playing to enable the next generations of semiconductor technology. In today's call, I will summarize some of the key themes we talked about at that event, including how advancing energy-efficient computing performance is critical to deploying AI at scale, why the energy-efficient computing roadmap is increasingly enabled by materials engineering and Applied Materials, and how we're working in new ways to accelerate this complex roadmap and create new growth opportunities for Applied. Semiconductors provide the foundation for tectonic shifts in technology that will reshape the global economy over the next several decades, including AI, IoT, robotics, electric and autonomous vehicles, and clean energy. These multi-trillion-dollar global inflections are increasing demand for chips and driving the need for significant advances in semiconductor technology. The biggest tectonic shift of all is AI, and the race for AI leadership will, in large part, be determined by which companies in the semiconductor industry are first to deliver substantial improvements in energy-efficient compute performance. In our discussions with leading AI companies, they are telling us that reducing power per operation is now more important than increasing operations per second. They are also talking about the need to drive a 10,000 times improvement in performance per watt over the next 15 years. Evolutionary innovation is insufficient to deliver improvements of this magnitude, and we're seeing the emergence of a new industry playbook made up of major device architecture inflections in logic, memory, and advanced packaging. These device architecture inflections are increasingly enabled by materials science and materials engineering, where Applied is the clear market and technology leader. For AI, the advanced chips in the data center used for training AI models are built upon four critical categories of semiconductor technology: leading-edge logic, high-performance DRAM, high-bandwidth memory enabled by die-stacking technology, and advanced packaging to connect the logic and memory chips together in a single integrated package. In leading-edge logic, key device inflections in both transistor and interconnect are currently moving from chip makers' R&D pilot lines to high-volume production. The transition from FinFET to gate-all-around transistors grows Applied's available market for the transistor module from around $6 billion to approximately $7 billion for every 100,000 wafer starts per month of capacity. We also expect to gain share through the gate-all-around transition, and we're on track to capture more than 50% of the process equipment spending for the transistor fabrication steps. For the interconnect module, our available market is also about $6 billion for every 100,000 wafer starts per month. We forecast this will also grow by about $1 billion with the implementation of backside power delivery, and we expect to win more than 50% of the applications we address in interconnect when backside power ramps in volume manufacturing. In DRAM, we've also established clear leadership in process equipment and are in a great position for future growth. Over the past decade, we've grown our market share in DRAM by around 10 points. As DRAM plays a critical role in energy-efficient computing performance, there's a huge focus on advancing the roadmap. The next major DRAM inflection from 6F squared to 4F squared, or vertical transistor architectures, is materials enabled, and we expect our market opportunity to grow by approximately 10% to around $6.5 billion for each 100,000 wafer starts per month of capacity. We also expect to increase our share based on our position to enable the 4F squared inflection. In addition, we believe the subsequent transition to 3D DRAM will grow our addressable market by an incremental 15%, further compounding Applied's opportunity. In the die stacking technologies that enable high bandwidth memory, we also have strong leadership positions, both in microbump and through silicon via. We have seen demand for high bandwidth memory accelerating in 2024 and expect to generate more than $600 million of HBM packaging revenue this year, which is approximately 6 times 2023. Overall, including HBM, we expect revenue from our advanced packaging product portfolio to grow to approximately $1.7 billion in 2024. We believe this business can double in size over the next several years as heterogeneous integration is more widely adopted and we introduce new solutions that grow our addressable market. Advanced logic, high-performance DRAM, high-bandwidth memory, and advanced packaging are all great examples of how future device architecture inflections are increasingly enabled by materials engineering. As a result, we expect materials engineering as a percentage of total wafer fab equipment to grow in both logic and memory through the coming node transitions. At the same time, thanks to our inflection-focused approach to R&D and the strong positions we've established at these future device architecture inflections, we expect to capture more of the expanded opportunities we serve. The value of bringing next-generation semiconductor technology to market faster has never been greater. At Applied, our strategy and investments are focused on accelerating the industry's roadmap to support the highest growth rate global inflections, spanning AI data centers, edge AI and IoT, robotics, electric vehicles, and clean energy. This strategy is enabled by 3 pillars. First, we have built a broad, unique, and connected portfolio of highly enabling technologies, as well as providing traditional best-in-class unit processes. We can co-optimize, combine, and integrate our technologies to deliver more comprehensive solutions that address higher value challenges for our customers. These integrated fab-in-a-fab solutions have grown from approximately 20% of our semiconductor products revenue in 2019 to around 30% today. We expect demand for our integrated products to continue growing, both at the leading edge and from our ICAPS customers who are serving specialty markets. Second, we are changing the way we work inside and outside the company. Over the past 5 years, we have built new capabilities and dedicated teams focused on module integration, device design and simulation, data analytics and AI, advanced packaging, and ICAPS. At the same time, we are driving earlier, deeper, and more extensive collaboration with our customers and partners to win the device architecture inflection races, accelerate mutual success rates, and increase investment efficiencies. To further support these collaborative partnerships, we will build out our global EPIC platform over the next several years, which is specifically designed for high-velocity innovation and commercialization of next-generation technologies. And third, we are helping customers transfer new technology into high-volume manufacturing faster and then optimize performance, yield, output, and cost in their factory operations. This is supporting double-digit growth in services with a high percentage of our service revenue coming from subscriptions in the form of long-term agreements. Overall, AGS delivered another record quarter, which is their 20th consecutive quarter of year-on-year growth. Before I hand over to Bryce, I'll quickly summarize. Applied Materials is delivering record results in 2024, and we're in a great position to benefit from secular growth trends over the longer term. Semiconductors are the foundation for tectonic shifts in technology, which will reshape the global economy over the next several decades. This is driving increasing demand for chips, as well as the need for significant advances in semiconductor innovation. The race for AI leadership depends on delivering significant improvements in energy-efficient compute performance in the range of 10,000 times over the next 15 years. The need for more energy-efficient compute is driving major device architecture inflections within the semiconductor roadmap that are enabled by materials engineering and applied materials innovations. This expands our served market and is accretive to our share. And the increasingly complex industry roadmap creates new collaboration and growth opportunities for Applied, enabled by our broad, unique, and connected portfolio of capabilities, products, and services. Finally, as you may be aware, Mike Sullivan will be retiring at the end of this calendar year and handing the reins to Liz Morali, who recently joined Applied as our new head of investor relations. I would like to say a huge thank you to Mike for his many contributions to the success of our company and congratulate him on an outstanding career. Now, over to Bryce.
Thank you, Gary. And I'd like to thank our teams for their strong execution this quarter, which enabled us to deliver record revenue, improved operational performance, and healthy gross margin. Today, I'll summarize the market environment, discuss our Q3 performance, and share our Q4 outlook. As Gary mentioned, Mike Sullivan plans to retire from Applied at the end of this calendar year. Liz Morali has joined Applied as our new Vice President of Investor Relations. Mike and Liz are working on a smooth handoff of the IR function beginning with our November earnings call. I hope you'll join Gary and me in congratulating Mike on his extraordinary career and leadership and welcoming Liz to Applied Materials. Beginning with the business environment, our revenue in Q3 as well as our outlook for Q4 reflect the industry's focus on the major inflections Gary highlighted earlier. We are seeing particularly strong pull related to AI and data center computing. Specifically, our DRAM system shipments remain strong, even as DRAM sales in China decline as anticipated. Adoption of high bandwidth memory and other forms of advanced packaging continues to grow. And in foundry logic, leading edge investment is growing each quarter and becoming a larger percentage of our mix while ICAPS demand remains strong overall. Turning to our Q3 performance, we delivered record revenue of $6.78 billion, which was up 5% year over year, with growth in all three segments. Operationally, we saw improvements in a number of key metrics such as manufacturing cycle times, linearity, and on-time delivery. These improvements give me confidence that we are preparing the company to more efficiently support the growth we are forecasting in the years ahead. The strong operational performance helped us deliver non-GAAP gross margin of 47.4%, which is up 100 basis points year over year. Non-GAAP operating expenses of $1.26 billion were up 8% year over year, and over 70% of the increase was driven by R&D programs aimed at the technology inflections Gary described. Non-GAAP EPS of $2.12 was up 12% year over year and 1 cent below our highest EPS quarter ever. Turning to cash flows and profit distributions in Q3, we generated nearly $2.4 billion in operating cash flow and over $2 billion in free cash flow. We distributed nearly $1.2 billion to shareholders, including the first 40-cent per share dividend and $861 million in stock buybacks. Turning to the segments, semiconductor system sales were $4.92 billion in Q3, up 5% year over year. Segment non-GAAP operating margin was 35%, up 130 basis points year over year. From a device perspective, our DRAM sales grew nearly 50% year over year to $1.16 billion. Our DRAM sales in China declined sequentially as we anticipated, and this contributed to our company revenue in China declining by 11 percentage points sequentially to 32%, which is in line with our longer-term average inclusive of semi-systems, AGS, and display. Our NAND memory sales grew 10% year over year to $203 million. Our foundry logic sales were down 4% year over year to $3.56 billion. Leading-edge foundry logic demand was lower year over year, but continued to strengthen on a sequential basis. We continue to expect to generate more than $2.5 billion in system revenue from gate-all-around nodes this calendar year, with the potential to more than double next year. Our ICAPS business remains strong overall, with pockets of weakness in the auto and industrial end markets. Longer term, we expect the ICAPS market to remain around half the foundry logic market as major inflections in IoT, autonomous and electric vehicles, and the global energy transformation are expected to drive mid to high single-digit through-cycle growth in ICAPS semiconductors well into the future. We are investing in new products to compete in more areas of the ICAPS semiconductor and packaging ecosystem. We are also working with our customers to enable new power and sensor device architecture inflections using our co-optimized and integrated material systems. Next, Applied Global Services delivered record revenue of $1.58 billion in Q3, which was up 8% year over year. AGS recurring parts, services, and software revenue grew more than twice as fast as overall segment revenue during the quarter. AGS non-GAAP operating margin of 29.6% was up 230 basis points year over year, and non-GAAP operating profit was a record $467 million. From a business perspective, customer factory utilization continued to strengthen during the quarter across memory, foundry logic, and advanced packaging. Our leading indicators of future AGS growth remain positive. Our installed base of systems and chambers increased 7% year over year, and our average revenue per unit increased even more. Our average subscription agreement length increased to 2.8 years, and the renewal rate was above 90%. We continue to expect AGS to grow at a low double-digit rate over the long term. As a reminder, the consistency of our profitable growth in services gives us confidence in our ability to continue to increase our dividend per share. In fact, over the past 10 years, we have increased the dividend per share at a compound annual growth rate of approximately 15%. Moving to display, Q3 revenue of $251 million was up 7% year over year, and segment non-GAAP operating margin was 6.4%. While LCD equipment spending remains low, we are becoming more confident that the OLED technology found in smartphones will be adopted in notebook PCs and tablets, whose larger screen sizes will require a significant increase in capital investments. Applied has built a leadership position in deposition and e-beam metrology technologies for the display industry, and we are well positioned to enable our customers to convert the notebook, PC, and tablet markets to OLED technology over the coming years. Now, I'll share our guidance for Q4. We expect company revenue of $6.93 billion, plus or minus $400 million, and non-GAAP EPS of $2.18, plus or minus 18 cents, both up 3% year over year at the midpoint. Within this outlook, we expect semi-systems revenue of around $5.1 billion, which is up 4% year over year, AGS revenue of about $1.61 billion, which is up 9% year over year, and display revenue of around $200 million. We expect non-GAAP gross margin to be approximately 47.4% and non-GAAP operating expenses to be around $1.275 billion. Finally, we are modeling a tax rate of 12.5%. Thank you. And now, Mike, let's begin the Q&A.
Thanks, Bryce. To help us reach as many people as we can, please ask just one question on today's call.
Please tap the like button. If we get 100 likes, we've got more than that watching. YouTube will suggest this video out to more people, and we'll learn more about, more people will learn about this great company. So please do tap the like button and vote in our X poll. We're running an X poll right now. I'll give you the link once again. So please vote, share, and like this video. Thank you.
Yeah, good afternoon. Thank you for taking the question. I guess for my question, I was hoping you could speak to how your outlook for WFE in the second half of the year and for all of 2025 has evolved over the last 3 months. Obviously, tremendous strength, anything AI related, but elsewhere, kind of seasonal at best. So I guess first part of the question is, can you share with us how you're thinking about your silicon business in the second half of calendar 24 versus the first half? And then, the early signs that you see today and how that informs kind of your view, both positive and negative, into 2025. Thanks so much.
Okay, CJ, thanks for joining the call. I think, what we're seeing in the business today when we look at Q3 and our Q4 outlook, very strong energy around the AI inflections that Gary talked about. So leading edge is accelerating. We highlighted that in the prepared remarks. Our forecast for $2.5 billion of gate-all-around related equipment in this fiscal year, we haven't changed that forecast. That stays the same. And when we think about DRAM and HBM memory, those kind of all go along with this energy we're seeing around the AI inflections and investments in that area. At the same time, our ICAPS business in both Q3 and Q4 remains very strong. We think that's robust. We can dig into that a little bit more during the call. But, if anything, over the last 30 days, you ask us, how we're feeling about the outlook. I would say the ICAPS business continues. It seems like every quarter we sort of raise our expectations with respect to ICAPS. So a lot of energy around leading edge, ICAPS remaining strong. Very strong year for DRAM and HBM. Those are kind of the key themes. For 25, we're not giving specific guidance, but we just say we're pretty enthusiastic about gate-all-around and the technologies we've talked about on the leading edge.
Thank you. And our next question comes from the line of Stacy Rasgon from Bernstein Research. Your question, please.
Hi, guys. Thanks for taking my question. I wanted to dig into the China revenues a little bit. So 32% of revenue this quarter. Sounds like a lot of that was DRAM. I guess that's was it all DRAM? And then in the guidance for next quarter, and I guess your expectations going forward from there, do you expect the China mix to be staying around these levels in the low 30, or does it go higher or lower? Is there anything else going on with China that we need to be aware of?
Great. Thanks for joining, Stacy. So, on the 32%, I'll shift your perspective on that just a little bit. So the 32% is almost no DRAM to China. So you've got it right. Our business mix to China declined to 32%. And if I think back in time, just to remind everybody, if we go just over a year back, it was, like 17% mix to China. We were having supply chain issues, so it was very low at that point. In the last 3 quarters, we bounced up to the mid-40s. Well, we served the DRAM that we could ship, and that's the prior 3 quarters. And we feel this quarter, 32% is probably normal for us, or in the normal range for us. That's across our entire business for shipments to China. And what it really represents is ICAPS. And the ICAPS market, in total has been very robust. We think it'll be a record year in our fiscal year for ICAPS. And China also, we would call it robust. We're adding customers, utilizations are improving. It's a, wide variety of products and factories. So, we think that market is robust both in Q3 and in Q4. So that gives you a sense of what's happening for us. And then next quarter, we'll have a small amount of DRAM, but nothing like we've had the prior 3 quarters.
So fair to say you still see the mix in the low 30s next quarter to China?
Yeah, we expect that mix approximately normal, which we call 30 for the next quarter, yes.
Got it. That's helpful. Thank you, guys.
Thank you.
Thank you. And our next question comes from the line of Srini Pajjuri from Raymond James. Your question, please.
Thank you. Bryce, just to follow up to the previous question on China DRAM, obviously you said it's near zero levels. Can you talk to your visibility as to when, if you're seeing any, hope on the horizon? Do you expect DRAM to come back at some point in China? And then also ICAPS, you said the demand is pretty strong in China. Can you talk to what kind of trends you're seeing outside of China for ICAPS? Thank you.
Yes, thanks, Srini. Thanks for joining. The China DRAM in Q3 and Q4 will be at nominal levels. We have speculated you may see new investments in DRAM there. I don't have any comments to make on that specifically for the roadmap, but I would say that DRAM globally is very strong. Should be a very, very strong year for DRAM. Of course, that includes some of that China volume, but we think that goes along with the mix to HBM, and utilizations in DRAM have improved, and there's a lot of energy around the high bandwidth memory for the leading edge systems. And then on the ICAP side, no surprise here for probably anybody. We expect the edge technologies that we describe as ICAPS to grow mid to high single digits over time, and that's driven by the inflections that we talk about, which is clean energy, renewable power, electrification, those sorts of AI edge sensors, all those sorts of usages. So mid to high single digits is our view long term. And when we look at China for both Q3 and Q4 and the entire ICAPS business, I said before, it's probably going to be a record for us in our fiscal year. And it's not just China. We've had other regions grow during this quarter.
Got it. Thanks, Bryce.
Thank you. And our next question comes from the line of Vivek Arya from Bank of America Securities. Your question, please.
Thanks for taking my question. I'm curious if we should bake in the impact of any CapEx cuts that were announced recently at Intel. What does that imply for just the overall WFE market for the remainder of the year and into next year? From your comments, it doesn't seem like it's having a big impact. Is the assumption that whatever CapEx is being cut there is being increased somewhere else, or just what are the puts and takes? Because it is a fairly sizable CapEx cut, which they are saying is more WFE in terms of the mix.
Yes, thanks for joining, Vivek. Our outlook, we're not changing our outlook. We're still saying $2.5 billion on the leading edge for gate-all-around in this fiscal year. And when we think about next year, we have every quarter accelerating this year in the leading edge, and we think that's being driven by a lot of the excitement around AI and AI data center. So we get, as I think we get regular updates from our customers, and our outlook that we've just given for Q4 is up to date with all of our customers. So I think we tend to think of the market as a macro level. Customers update us all the time, but no real change to our view for leading edge looking forward.
Thank you.
Thank you. And our next question comes from the line of Chris Caso from Wolfe Research. Your question, please.
Yes, thank you. Good evening. Question is on foundry logic, and perhaps you could give some color on the growth you're expecting into 25, driven by some of the new process nodes such as gate-all-around, as compared to capacity, because we know foundry capacity additions have taken a pause here. Are you seeing any signs of that starting to improve either as you go through the second half of 24 into 25?
Yes, thanks, Chris, and thanks for joining. When we think about leading logic, actually, I'll make a comment for utilizations. We've seen utilizations improve in every single end market this quarter, and our expectation is for that to continue next quarter. So, DRAM, NAND, ICAPS, and leading edge. And, no change to our expectation on absolute leading edge investment, gate-all-around technologies, not changing our number for this fiscal year. And we do think it's a harbinger for, acceleration next year as we look forward. We're not giving a guide for 25, but we think there's a lot of energy around the AI markets, and we see that in HBM, we see that in DRAM, we see that in leading edge acceleration. So, we'll hope that those trends continue.
Thank you. And our next question comes from the line of Krish Sankar from TD Cowen. Your question, please.
Yeah, hi. Thanks for taking my question. Gary or Bryce, I'm kind of curious about, I know you don't want to comment on next year, but qualitatively, if there's optimism on DRAM and NAND WFE growing. But if you strip out HBM, you're beginning to see big demand in memory pricing, moderate for DDR and NAND compared to the first half of this year. So I'm curious how to think about DRAM and NAND WFE next year relative to this year, and what end markets actually drive that spending next year.
Okay, Chris, you're right. We won't give a guide for 25 specifically, but we do think that DRAM, even outside of HBM, we do think that DRAM will put new capacity in place, so we expect investment in DRAM. There has been additions in wafer start capacity in DRAM, and there's more allocation of the DRAM capacity to HBM, as you sort of highlight. So, the investment level there is higher than NAND. Looking forward to NAND still, it still remains fairly low, but we did see, as I highlighted, utilizations improving. I would call them, probably normal range for both DRAM and NAND. We see prices improve. We saw inventory positions improve at the vendors. So we think it's a more positive environment looking forward than prior quarters for actually both memory technologies.
Thanks, Bryce.
Thank you. And our next question comes from the line of Joseph Moore from Morgan Stanley. Your question, please.
Great, thank you. Looks like you had some good, solid growth from the services business. Again, are you benefiting there from the utilization increases in memory that you just talked about? Are you seeing offsetting utilization declines on the ICAPS services side? And then any indication of, customers worry about export controls, stockpiling on spares, anything like that? Just any puts and takes around that service growth. Thank you.
Hi, Joe. Yes, thank you. Services business, very exciting for us. We grew 8% year over year in Q3, 9% is our expectation for Q4. And just a reminder for everybody, we expect low double-digit growth going forward. We're expanding our services book with customers, kind of getting into information, AI-related services that help them ramp, et cetera. We actually did expect a little more growth in Q3. We had thought we would grow double digits this year. We're just short of that, and it's because utilization, while it grew a little bit less than or a little bit slower than we thought. So there's good news here. Utilizations are improving across the whole system, 8% year-over-year growth for us, and we expect that to pick up, as I highlighted, as we go into Q3 and looking forward. And just, one other comment just for the rest of the investors. The other thing with this business, since it's mostly recurring revenue for us, about 85%, that gives us a very stable operating profit and growing. And so we think about our dividend as being enabled by the profits from the services business, and that gives us confidence we'll be able to raise our dividend looking forward.
Hi, Joe. Just maybe a little bit more color. If you look at what really all of our customers are focused on, there's a race for these new device architectures, and the complexity is going up a significant amount. And in the prepared remarks, I talked about 30% of our tools are these integrated platforms that have a high degree of complexity. So, as these customers are racing to bring these new devices, complex devices to market. And also, we're shipping more and more of these integrated platforms with multiple technologies. That also gives us a really good tailwind.
Thank you.
Thank you. And our next question comes from the line of Joe Quatrochi from Wells Fargo. Your question, please.
Yeah, thanks for taking the question. I wanted to ask about the advanced packaging. I think based on the revenue expectations you have for HBM and advanced packaging, it imply basically that the non-memory advanced packaging relatively unchanged year over year. So is that the right way to think about it? And if so, why wouldn't that grow this year?
I think so, Joe. In our forecast, we highlighted that advanced packaging was $1.1 billion last year, should grow to $1.7 billion this year, and we highlighted that $600 million of the growth would come from HBM-related equipment. So I think you're thinking about it right. It was probably stable this year with HBM, high bandwidth memory, driving the growth in that area. And again, we would point back to the energy around high-performance systems and sort of the race Gary talks about to develop systems optimized for the AI workload. So there's a lot of energy there at this point. And then just the last thing is we have highlighted that total packaging business, sort of to your point, $1.7 billion. We think it has the opportunity to double over several years looking forward, given the energy around advanced packaging technology. So we'll keep investing there.
Thank you. And our next question comes from the line of Toshiya Hari from Goldman Sachs. Your question, please.
Hi. Thank you so much for taking the question. I was hoping you could speak to gross margins and how you're thinking about profitability going forward, the puts and takes, Bryce. And Gary, you talked about complexity growing and how things like AMAT contributing toward 30% of your business and that number growing over time. I would think your ability to price would improve going forward. What am I missing in terms of, again, the puts and takes as it pertains to gross margins? Thank you.
Okay, thank you, Toshiya. I'll start on that. So 47.4% gross margin for us in the quarter. We're actually very pleased with our performance in cost and pricing this quarter. And I'll just highlight, as our mix to China, which are generally smaller customers, declined during the quarter to 32%, that gave us some headwinds on the gross margin side. We were able to get some pricing performance and also some cost improvements and improvements in managing our inventory that helped us offset that mix decline and deliver 47.4% in the quarter. Since the China mix is 32%, we call that normal. I'll say now that 47.4 should be approximately our baseline level. And then we look forward. We've talked about a goal of getting to 48 or higher next year. That's still our goal. We think we can make improvements going forward. There's a couple of headwinds. If services or display grow faster than the core business, that can be a headwind. But that's still our goal, and we think we'll continue to make cost and pricing improvements. And then Gary on them.
Yeah, Toshiya, again, our focus is really to enable our customers to accelerate their innovations for these new architectures, especially around AI data center. That data center will pass smartphones and PCs relative to wafer starts. Everybody is focused on energy-efficient computing. So these inflections are incredibly important for the entire ecosystem. Whoever gets there first wins big, and everybody else is left behind. So we're driving tremendous innovations in foundry logic, leading edge, high bandwidth memory, DRAM. There's new architecture inflections. I talked about 4F squared, advanced packaging. So our positions in all of those inflections are very strong. We're on track to capture more than 50% of the inflection spending as those new devices ramp. And our goal is to move the needle for our customers and for Applied, and that includes how we drive value for them and how we drive our margins higher.
Thank you.
Thank you. And our next question comes from the line of Harlan Sur from J.P. Morgan. Your question, please.
Yeah, good afternoon. Thanks for taking my question. So as we look at those companies that are pushing the absolute limits on advanced manufacturing technologies like 2 nanometer and 3 nanometer, and they're maxing out their reticle field limits, they're also pushing advanced packaging technologies. They're designing, these are the guys that are designing the AI and accelerated compute GPUs, ASIC accelerators, for example. So what we're hearing is that most of today's designs on these next generation chips are targeting tape out second half of 25 and beyond. They're specifically focused around these new 3D SoIC architectures, so using hybrid bonding, chip stacking approach, 3 nanometer on 3 nanometer die, 2 nanometer die on 3 nanometer die. The manufacturability challenges here are pretty significant, right? But similar to your front-end integrated solutions, the team has been working on an integrated hybrid bonding system with some of your partners. What's the timeline for introducing these integrated solutions, and will you be trying to intercept these next generation of 3D SoIC solutions coming to market, let's say in the 2026 timeframe?
Oh, hi, Harlan. Thanks for the question. So heterogeneous integration is one of the biggest areas of focus for Applied and for the entire industry. At our AI event, along with AMD at Semicon, there was a discussion around driving 100x improvement in energy-efficient computing. So again, this is the big race that everybody's focused on, and certainly packaging is a key part of that. So we're in deep engagements, really, multiple technology nodes, 5-10 years out into the future, and there's going to be tremendous innovations. If you look even at new DRAM technologies like 4F squared or high bandwidth memory, you're going to see adoption of hybrid bonding technologies that are going to be really important for those parts of this ecosystem. And you mentioned what's happening from a logic standpoint. So I think the great thing for Applied is we have this broad portfolio in packaging. We have, as you mentioned, the hybrid bonding, digital lithography. Yep. We have other new technologies in the pipeline that even expand our portfolio further. We have an advanced full-flow packaging lab in Singapore where we're driving co-innovation with our customers to accelerate those architecture inflections. So I think this is going to be one of the most exciting segments of the market going forward. We're at about $1.7 billion today. We've talked about doubling the packaging revenue over the next few years, and I think it's going to keep going from there. Again, this is a really key part of the industry drive for energy-efficient computing.
Thank you, Gary.
Thank you. And our next question comes from the line of Charles Shi from Needham & Company. Your question, please.
Hi, good afternoon. I want to follow up on the China question. Looks like your China revenue has well passed the peak around almost the $3 billion per quarter level. Now it's down to in the low $2 billion. And based on the commentary, sounds like you are still expecting roughly 40%-ish of the China revenue growth year-on-year. But should the current dollar revenue level sustains into this year? I'm just hoping if you could give us any color, because that would imply the China revenue probably is going down year-on-year, roughly 15-20% next year. I know you're not guiding, but that would be the conclusion I draw from all the commentary you provided. And plus, I do want to get a little bit more insights. But if I compare the China revenue performance of Applied Materials with some of your process control peers like KLA, they were expecting China to be flat into the second half, but you're obviously seeing a half-over-half decline. Since you have the PDC business, and I was hoping you definitely will have some insights into what drives the dispersion there. Thank you.
Okay, Charles, thanks for joining. I think I would separate between ICAPS, our the edge technology markets, and the DRAM market for China. We had 3 quarters with elevated shipments that we described where we caught up on what was allowed from a DRAM perspective. If you separate that out, we're currently not expecting that to repeat, at least nothing near that magnitude for next year. So that leaves us with the ICAPS market. And what we expect in the ICAPS market, our Q3 and Q4 and all of this year has been very strong in ICAPS. When we look at China in particular, utilizations are improving. We're adding customers. We've got a large number of factory projects that are building out. So if you strip out, your estimate for those extraordinary DRAM shipments the last 3 quarters, our expectation over time is that the ICAPS market will grow. We say mid to high single digits. We don't make a call for next year, but we would expect growth over time.
Thank you. And our next question comes from the line of Brian Chin from Stifel. Your question, please.
Hi there. Good afternoon. Thanks for letting us ask a question. So if I look at the past 3 years, past 3 10Ks, TSMC was your largest customer, but they weren't 10% in either the April or January quarters. Taiwan as a geography was a little higher this quarter. Did TSMC cross the 10% threshold in fiscal 3Q? And then even bigger picture, this overall pattern would seem to suggest a pretty favorable year-over-year compare moving into 2025 when you think about the type of spending gate all around and expansions being discussed. And so just kind of wanted to get maybe your view on that.
Yes. TSMC was a 10% customer in Q3. And, we think obviously they're a large part of that leading edge investment when we think about the gate all around technologies and a lot of the energy being driven there as we look forward. One of the other callers talked about the need for innovation, and Gary talked about the need for innovation on leading edge. There's a lot of energy around that. We see acceleration each quarter of this year on leading edge, and really haven't changed our outlook as we've moved through the year.
Okay, thank you.
Thank you. And our next question comes from the line of Blayne Curtis from Jefferies. Your question, please.
Hey, thanks for letting me ask a question. I was maybe a little confused on some of the history with ICAPS and the strength. I thought you were talking about last quarter, that segment kind of being down slightly, and I think you just said mid to high single digits. So maybe I have my reference point wrong, but also maybe it'd be helpful if you could just talk about the growth you saw in July, 15% sequentially for Foundry Logic. If you just relate that to leading edge and ICAPS. I think the perception is leading edge very strong, but it sounds like your comments on ICAPS are suggesting that ICAPS is also strong. But then I'm trying to put that all with like the comment that it's going to be 50% of the mix, which I thought that business was running a lot higher. So if you can kind of just help with a little history and then how July played out would be helpful.
Yes, thanks, Blayne. So in the quarter, we did see strength in both end markets, leading logic and ICAPS. Leading logic is accelerating every quarter this year, and we said ICAPS is very strong and continues to be strong throughout the year. This will probably be a record year for us in ICAPS for our fiscal year anyway. And so, leading logic is accelerating based on, the gate all around investments and the AI trends that we're talking about. And then ICAPS, we put the mid to high single digits was a longer term forecast. We've had utilizations improving, and when we think about that market, we don't give a guide for next year, but we think there will be continued growth in the mid to high single digits as all those different end markets like AI sensors, electrification, autonomous vehicles, renewable energy, all those end markets continue to build out and grow faster than GDP. That's our expectation.
Thanks for that.
Thank you. And our next question comes from the line of Jed Dorsheimer from William Blair. Your question, please. And as a reminder, if you do have a question, please press star 11 on your telephone.
Hey, thanks for taking my question. Just a two-part one on the ICAPS, Gary. So first, in that business, I was just over in some of the fabs, your customers over in Malaysia last week, and it seems like capacity expansion outside of China has started again after some of the EV pressures have shifted to opportunities in power density and data centers. So I'm just wondering if you could comment on that. And then secondly, just as it relates to services for ICAPS, is that the same as on leading edge, or are there nuances in terms of the amount and timing there? Thanks.
Oh, hi, Jed. Yeah, so ICAPS, we're very bullish on ICAPS longer term. Bryce talked about kind of high single-digit growth rates in ICAPS over time, growth driven by all of those different segments, IoT, industrial automation, robotics, really edge computing also for AI. We think that's going to be a really strong business. I think many of the people on the call know that over 5 years ago, it's actually April 12th of 2019, we formed our ICAPS group. And since we formed that group, just to focus on that market for IoT, communication, auto power, and sensors, we've had share gains in that market. We've introduced more than 20 major new ICAPS products. And this group is just completely focused on innovation in those device segments. And there are races that are happening there. Your comment on what's happening on the different device segments. If you look at power electronics, there will be some major architecture inflections that will happen there that are important for electric vehicles and renewable energy. And we have an ICAPS architecture innovation group co-innovating with our customers on those new ICAPS architectures. That's part of the strategy that we built over the last 5 years. We have new products that are in the pipeline that will serve large ICAPS new segments and new products for cost-competitive applications. So, again, it's been a big focus for us over a number of years. We've built tremendous capabilities. From a service standpoint, ICAPS is also a good market for us. And that's part of that overall growth opportunity for us, not only on systems where we've gained a significant amount of share. I'm very positive on how we're positioned. The actions that we've taken, I think, really position us going forward in ICAPS. Bryce, I don't know if you want to add anything else.
No, I would just say that 2 of our regions grew during this Q3. So, if the question is there investment in other areas of the world? Absolutely. And, we expect that to continue. Thanks for the question, Jed.
And operator, we have time for 2 more questions, please.
Certainly. And our next question comes from the line of Mehdi Hosseini from Susquehanna. Your question, please.
Yes, thanks for taking my question. Just a very quick follow-up for Bryce. If you could give us an update with the progression towards the 48-49% gross margin target, I assume that's for fiscal year 25, and how the funding for the EPIC R&D Center, which I think is a $4 billion project, is going to impact those targets. Thank you.
Okay, thanks, Mehdi. So the update, the gross margin at 47.4, we expect to make, we talked about very gradual improvements as we work towards that 48, and that would still be my expectation. You see, actually, the movement between last quarter and this quarter was modest. We, fought those headwinds that we had from a mix perspective. On the EPIC, we did get the notice that we're not getting the grant, but EPIC, that's an important platform for us. It stands for Equipment Process Innovation and Commercialization. It's going to allow us to accelerate co-innovation with all of our customers. We are continuing with that investment. It will elevate our CapEx as we look forward, and we are benefiting from the investment tax credit that's related to those types of projects. So we still do have some help from the government from that perspective. And just a couple other modeling notes since we're on CapEx. So as we look forward, the CapEx will for the Epic Center and in general will be at a higher run rate than we've had in the past. If you look forward in your modeling, just wanted to highlight that Q1 will be our normal step up for pay-related increases, and that you can look at the history to see what that step up should look like if you're modeling that. And then the last piece would be our tax rate. Tax rate at next year expectation will be 14% versus the 12.5 this year, as more of our worldwide mix will be U.S. related, so that will change the tax mix. So thanks for the opportunity to get those in there.
Yeah, Mehdi, this is Gary. Maybe just a little bit more color on Epic. As we've talked about, the whole industry is in a race to be first to market to deliver innovations for energy-efficient computing. So, we, in discussions with our partners, our customers and partners, we really believe that Epic can enable us to innovate the way we innovate, really innovate in parallel, so accelerating both for our customers and partners and for Applied, our ability to bring those energy-efficient innovations to market. So, the concept, we're getting tremendous traction and pull with our customers and partners. We also think of Epic as a global platform. So where we make investments is going to be based on incentives, talent, proximity to innovation ecosystem. So we are moving forward for sure with this Epic concept. Very good traction with customers. And again, over the last several years, we've built out this innovation engine inside Applied Materials. We have architecture innovation teams that are working on ICAPS. They're working on foundry logic and DRAM and packaging. We have this unique and connected portfolio of materials innovations that are crucial for all of those major inflections. So Epic is a way for us to innovate the way we innovate, to move all of that in parallel, to accelerate all of these major inflections that are crucial for AI, data center, and all those major tectonic shifts in technology that we talked about earlier. But again, where we invest is going to be based on incentives, talent, and proximity to a local innovation ecosystem.
Great. Thanks, Mehdi, for your question. I think we're approaching the end of the hour. So, Bryce, I'm going to go ahead and ask if you have any closing thoughts for us.
Okay, thanks, Mike. From my perspective, I'm pleased that the investments we've been making in the technology roadmap inflections and also in our operational capabilities are showing up in our financial results this quarter on both the revenue and gross margin lines. I believe we've put the company in a great position to grow along with megatrends like data center AI as a whole host of new technologies come to market across leading-edge foundry logic, DRAM, advanced packaging, and ICAPS specialty chips. We have the fuel we need to keep driving the materials engineering roadmap with our customers while also distributing profits to our shareholders through dividends and buybacks. Gary will be at the Goldman Sachs conference in San Francisco on September 11th, and I hope to see many of you at the Citi conference in New York on September 4th. Mike, thank you, and please close the call.
Okay,
there we go. That's Applied Materials AMAT. Right, we are running a poll right now asking if you would like me to do an analysis breakdown of that stock, which I will then put out as a video. Most of our stocks reviews that we do rank number 1 or 2 on YouTube and Google, at least YouTube. So a lot of people will get to see about it and hear about it, which is great. And I'd like to do a review if we get a majority. So if you want to vote in the poll, we'll do it in a couple of minutes. We have on the extra channel at the moment, we're running 2 earnings at once, and I am literally listening as I'm talking to you. I'm listening into other earnings. This is what's going on right now on the extra channel. We're running 2 earnings at once. This is ESP. This is behind me, listening into Despegar. Yes, I'm running 14 screens and multiple. I do 4 earnings a day, so I like to understand what's going on in the markets. Pretty crazy, right? But anyway, that's just me. So I'm just going to wait for that to finish. They're coming down to the last couple of questions, so they will be finishing off there in a minute, and then I'll start the review because I'll bring that audience through into the main channel. So before I start the earnings, we're just going to wrap up a few things. The poll is still running at 75%. The majority will rule. If I get at least 75%, I'll be doing it. So 28 votes. If you want to vote, please do vote on that. Also, before I go into the review, there's a couple of things we'd like to do. I like what I'm hearing tonight. I think this is a good investment. I will tell you that. It's a sort of company that I like. Remember, I only own the S&P though, because I don't want to be influencing stock or being biased. I'm not a pump and dumper at all. I'm here to help and support people. So remember that. I only own the S&P. I'm $180,000 in. This is my brokerage account, 81 grand. I'm beating the market by double again today because I'm all in a margin. This is my Roth IRA. This is my overall balance plus my margin, which gives me $180,000. In fact, $190,000, and I'm all in. So that's they got one last question, so they're just coming to the end now, which is great. So let me go back to here again. I'm just going to prepare this review for you, AMAT, as we bring the call to an end on my second channel. So just before I do that, we will close the poll in just a moment. Last chance for you to go and vote on this. And this is where we make friends at the company. I've got CEO friends. We have CEO invitation, meet the CEO videos live, and unscripted videos that we do here on the show. We also have lots of friends in Wall Street and fund managers and people that work at the factories. I speak to those through my X account and my Instagram, and I share everything with you so you know exactly what's going on. And I also post my trades before I make them, my moves before I make them, always ahead of time. There's also members-only videos, members-only live streams, which go out earlier as well. So here is the link right now to X. Let me just give you this, because we're running a poll tonight for your stock here. Let me just go down to it. Here we go, AMAT. Let's have a look. We're on the last question, so we're going to do the review in just a moment. So the question I want to ask you is this a buy, hold, or sell for you? We take a lot of notice of this, and the company and contacts that I have watch this as well. So we've got 57.9% buy so far. 15.8% is a hold, and 26.3% is a sell. So please vote on that, and let's see how that goes. We're just waiting for maybe another minute, maybe a minute or two at most, for the call to end on the extra channel, and I'm going to bring everybody here. So please just bear with me a second, then we'll do a review on this stock. If it's your first time, consider subscribing and tap the like button. If we get If we get 100 likes, YouTube will suggest this video out and share it to more people. Someone just asked, what's the progress with the gold mine? It's for members only, so that is shut down now. That's all being taken care of for the members. So say if I notice you're not a member, so that deal is now not open to you. Okay, they're ending now on extra. Here we go. Let me just end the call. Okay, guys, stay right where you are. Just about to end the call and bring you back to where we are. We're about to do a review. Okay, guys, so what we're going to do now is end the call and take you back to Applied Materials, which is the major event happening tonight on the main channel. So let me just end the call where you are now. It'll bring you automatically here, and we're about to do a review and answer some questions. So let me give you the link in the chat. Do come and join me. I'm about to give you the link there. There is the link, plus I'm going to end the show. Thank you very much for joining me. Please tap the like button now. Come and join us on the main channel. We're about to do an analysis on Applied Materials. Let me end the stream. Here we go. Okay, that stream is now ended. That should bring everybody through. It does. And let me just wrap that up just a moment. Fantastic. Make sure we're in the right place. We are. Just bear with me, folks, as we end the last stream. And we've got our stream for the morning. Yes, we're going to be live with CINT stock. CI at and T in the morning. That's what we're doing in the morning on the extra channel. We've got an earnings here on the main channel as well, so I will share it with you. But right now we're going to do this review. So there we go. Thank you ever so much. We've also got a new member now who just joined. So let me welcome in our new member. Let me end this poll because we've got a majority now. End the poll. There we go. I just wanted a majority. We do have that now. Weird vibes. Cryptic answer. There's no cryptic answer about it at all. There's no cryptic answer, Safe Khan. You're not one of my members, so the deal is now closed. Jefferson Boots, the CEO of the gold mine, is in constant contact with all of the investors, but we are in a quiet period as we move into becoming a public company. So it's not weird or strange or cryptic at all. It's just that everything is moving forward as it should do. But if you are a member or an investor, you will be in touch with the CEO of the company and you will know. I can't give any further information live on the show because we are in a quiet period. There's nothing cryptic about that at all. That's just how it is, but it doesn't affect you because you're not in it anyway. So anyway, let's move on. Right, we've got that ready to go. And okay, so if we got any more questions or if would anybody like a live phone in before I wrap up and do this analysis? Let's have a look. My friend dad retired from AMAT and set for life. I remember AMAT at $82, says Zach Zate. I am done betting on earnings. Well, you should never do that anyway. That's the worst mistake you could possibly make. If I was betting on earnings, I wouldn't be at 107,000 when I started at 5,000 at all. I'd be bankrupt by now, I would imagine. Do not bet on earnings. Right, okay. I think we've wrapped everything up, so let's bring everybody up together. So has everyone tapped the like button and has everyone subscribed to the channel so we can get this over 100 and get YouTube to suggest some more information, suggest the video out. Right, let's have a look. Okay. Let's do a review on this stock, how we feel about it. Here we go. Just line a few things up. Oh, what a day. It's been a good day. Broken all-time highs again, beaten the market again. It's been absolutely wonderful. Remember, it's very easy to make money. The hard part is to keep it. Most people like to gamble and take risks. I don't like doing that. So, okay, here we go. Let me make sure I've got this in place. Our new member, by the way, I'm just going to give you your video you need to go and watch. It tells you all about the perks that you get as a member. I want everyone to welcome our new member. It gives you many, many things. If you watch this video, it'll tell you all about the things that you can get as a member, and you'll then know what it's all about and all the rest of it. So please do go and check that out and you will get all the information. And all the links are below all the videos, martynlucas.com, all the links there. We can upgrade you to Discord. We can give you access to this free, we don't charge, it's free training on Discord once we upgrade you. But all the information will be explained in that video. We've got members-only videos, members-only live streams. You can have a review. You can have earnings. We got another 2 in the morning. We do 4 a day. $5 you can order. You can order your own reviews. You can order your own earnings. There's many, many things that you can get, and on all the rest of it. Right. So I'm sorry I can't share all the links at the moment because for some reason my Stream Deck isn't working as it should, but all the links are on that video anyway. Okay, so let me scroll to the top. and give you this. Okay, so here we go. Breaking news here on Martyn Lucas Investor. We've just heard Applied Materials, ticker symbol AMAT earnings. And some people in the chat are very upset. Why is it selling off? What's going on? They bought it at the top, and using their own words, they bet on earnings. Always a very dangerous thing to do that. I, as you know, am a long-term investor. I've grown my portfolio to 180,000 if you include all my positions, margin included, and I started with $5,000. I like to own businesses that I can keep for 10 years. In fact, never sell them at all, just live on dividends and growth and so on and so forth. That's me. But then some people like to trade and gamble, and not really my way of making money, but for some people they do that. But Applied Materials, I've just listened to the earnings. It's the first time, I think the second time I've covered the earnings, and I like the business. I will tell you straight off the bat, I like the business, but I'm going to show you why I like the business. And remember, I do not own the stock. I only own the S&P 500. I don't know if it's part of the S&P. I haven't actually looked, but I don't buy individual stocks because I don't want to be pumping and dumping stocks. That's not what I do. I like to just give you unbiased, real, impartial information and share with you. So if this is interesting to you, tap the like button. It's just a brief reaction to the earnings. It's not a full review by any means. It's just a brief reaction to what we've just heard, and is it worth investing in? Well, first of all, what's very interesting is this is a growth stock that also comes with a dividend, okay? Now, a very small dividend, nevertheless, but we are moving up, and this is important to share with you. So let's start by looking at the dividend. It's not a dividend king or an aristocrat, hasn't been going long enough, but the business has been around quite a while. But what we like here is if we look from, say, 2010, it's paid out every single time. It's paid out every quarter, which is good. 7 cents, 7, 8, 8, 8, 9, 9, 9, 10, 10, 10, 10, moving up now, 10, 10, 20, doubled there, 21, 21, 22, 24, 24, 26, 32, 40, all the way up to where we are now, 40 cents. So that is great. That's a very, very good sign for a growth stock. We don't have that. We don't have that with Tesla, do we? Or many growth stocks. That's good. It's paid out every time, and it's consistent, and it's consistently going up. We like that. So it's got some stability here. A very well managed company. I like that. And what I've heard from the earnings call is very encouraging too. So that's a tick from me. First of all, how does it compare to the S&P? Now, if we put $10,000 in the S&P back in 2015 at the same time as we put money into Applied Materials today, from 2015, so 9 years, we've 3x'd in the S&P. We've got 31,871. Applied Materials, however, have given you a 9x, maybe a 10x actually, just about a 9.6x, all right, nearly 10x, 96,245. Very, very nice indeed. But of course, then people are thinking it can go on forever. I'm going to buy it and it can keep running up. Well, I think this business can. However, they get disappointed when it goes down. Remember, tonight is hardly moved at all. People have done options or maybe predicted prices. I never do that. I only ever own the businesses, just buy the shares and hold. I never do options. I don't believe in it. I also don't short companies, especially, I've never shorted a stock, but especially an innovative company like Applied Materials is, with such a good balance sheet. And I'm going to share that with you. So this growth is fantastic. What we do see, however, and this is why people get disappointed, is in 2020, we see here a massive rally when the stock market was pretty stable, but it wasn't doing much. A big rally, and that happens when COVID happened. A lot of people overbought Tesla, overbought Applied Materials, overbought lots of sexy rock and roll innovative stocks. They did the same thing, if you remember, Peloton and Zoom, and look what happened to them. But I don't like that, but what that does do, it brings people, mainly on Robinhood, I have to say, younger investors, when they first started on Robinhood, all started buying sexy stocks, and they just think that it's a cash machine. They think it's a casino. And then when things start going down, they go, well, this is rubbish. What's going on? Well, you know, that's why it got overbought. It got overbought during COVID. It came back down again. People took profit, and now we're growing again. Now, I like to buy stocks on the way up, even though I try to buy them on the way down. I don't mind buying on the way up if a stock is going to grow. I'm looking at the balance sheets and where the business is going, not where it's been. I'm not interested in where it's been. I'm interested in where it's going, okay? So I don't mind buying a stock on the way up. If someone told me today Applied Materials is going to be $1,000 by the end of the year, I don't mind paying $500 for it because it's going to double. However, stock going down, why is it going down? Is it being sold off just because people are taking profit, or is there some fundamental problem? There's no fundamental problem here at all. There's profit taking because we're about to come up to the instigator of the year, of course, and we're going to cover it live. Of course, I'm talking about NVIDIA earnings in just a couple of weeks' time. So some people are taking some profit today from this stock, and that is not an issue. In fact, we've had a little bit of selling pressure after hours tonight with NVIDIA, and we all know where NVIDIA's going. It's a $200 stock. All right, so there's nothing wrong with this at all. That's the first thing, and we can see the sort of thing that goes on here. This stock got really pumped up through COVID, and of course that then makes people feel like it's not worth it when you have a down little moment on an earnings. So you should never bet on earnings anyway. I don't bet on any stocks. I own the businesses. That's it. Now then, I've got some software I'm going to apply to you now, which to present more numbers for you. And if you stick to the end, I'm going to give you the links here, and you can use the software that I use, a lot of it for free, and a lot of it I'm giving away discounts and money off and all sorts. So just bear with me. First of all, I want to share with you some information on Seeking Alpha. I've got a premium service on Seeking Alpha, and we can see that Seeking Alpha analysts are saying a hold. In Wall Street are saying a buy, and Quant, which is their AI at Seeking Alpha, also a hold. No selling here at all. Very, very good indeed. And our factor grades haven't really changed at all. It's business as usual, which is good. I like that. It's business as usual. Nothing really going in the wrong direction on our factor grades, which is important. But the ratings are all good. That's good. I'll give you the link below the videos if you want any of my things. I've just got a new deal here from Seeking Alpha. If you want it, I'll put it in the chat, but it's also below the video. You get a free trial. You don't get a free trial if you use it directly, but with me you do, and you also get $25 off as well. Great deal there. Anyway, that's Seeking Alpha. I've got some news here from Seeking Alpha as well. Applied Materials result just in, outlook mostly in line. This news has just come out just literally 20 minutes ago. It's brand new. If you've got a premium service on Seeking Alpha, you can get this, but mostly in line. Things are looking good. Let's have a look at it. Reported a third quarter fiscal 24 that surpassed estimates after the market closed on Thursday. The outlook for the quarter in progress was mostly in line. Shares of Applied Materials closed the day up 3.4 and inched up another percent during the early post-market action. The Santa Clara, California-based company reported earnings per share of $2.12 versus the consensus of $2.02, which is great. It reported revenue for the quarter ended July 28 for $6.78 billion, which is more than the estimates of $6.7 billion. So why sell off? No reason. People taking profits because they know we're going to rally again when we get NVIDIA earnings. So why not take some profits? For me, I never sell because I don't pay tax and I build up my portfolio. I'm building up a portfolio of $1 million. So that's not for me. Anyway, net revenue from the semiconductor systems segment totaled $4.924 billion, which was a year-over-year increase of $248 million. I'm not going to read any more. If you want the rest of this review, you can read it yourself on the link I just gave you. If you use my free trial, you can get all of this for free anyway, or use a $25 discount. All right, let's move on and see a bit more information here. Let me open up. I want to open up. I've looked at this. We've already seen this. What I want to share with you now is this. I like this. You ready? Okay. This is another bit of software I use called Alpha Spread. I know the CEO personally, and I get the best deal that anyone gets. All my members get this for free. Even better, right? Okay, now then, if we look at the intrinsic value, which we can rely on, it's overvalued by 29%. Is that a problem? No, it's not. I am happy to pay over 25% overvaluation on a growth stock because this has huge potential. And in a moment, we're going to come on to the balance sheet and I'm going to show you why I believe it has huge potential. And you can decide for yourself whether you agree with me. But I'm okay with this. I like 25%, but 29 is okay. Bearing in mind, we haven't probably updated since after hours. So it's probably down about the 25% now. So I'm okay with that. A best case scenario, as you can see, it's fairly valued. And we are best case now. We're going into a major upswing on the markets. Rates coming down. Growth is strong. Everyone is spending money now. Google ads, I know, have gone up, which means Google are making more money. More businesses are advertising. Nvidia is going to be $200. So all of this is good for the stock. If we look down here and we look at the revenue, all increasing, all going in the right direction. I like all of this. What about the balance sheet? Very, very important. The balance sheet, long-term debt is 39%. This is the long-term debt. If you like this software, you can use this for free, by the way, and I'll give you the link to this. In fact, I'll give it to you now. If you like this, all my members get access to this for free. If you want the premium discount, my members get a 10% discount, which makes my membership for free. There you go. There's Alpha Spread. I'll also put it below as well. 31.9 billion in assets, which includes 7.6 billion in cash, and their long-term debt is just 5.5 billion. So they can pay all their debts off tomorrow. So the business is strong, and with rates coming down, that's going to be a catalyst because their debt is going to cost less. All right, all gross margins are great, and I've compared these to other businesses. They're very, very good. Not quite Nvidia levels, but good nevertheless for the industry. If you want to compare them to the industry, you can by simply going through this here competition, and you can see how it compares to the industry. Again, my software will provide that. What I want to share with you is this. This is exemplary. Profitability, 76%. Doesn't get much higher. And the solvency score is 85. Doesn't get much higher. Strong business, going nowhere, long-term hold, fantastic, great balance sheet. If we look at the worst case scenario, downside of 6%. It's not really doing that much. It's not going to go down. If it goes down 6%, I just buy more. What I would do, let's say I was going to spend $1,000. I'd have $1,000 on. I would have $1,000 to buy. I would buy $800 worth now because I like it. I would hold $200 on the sidelines. If it does drop, if it doesn't, I let it go. I'll wait for an earnings moment or some rumor of something and then buy. If it keeps on going up, doesn't matter. I've got $200 on standby for something else. I let it go. But that's what I would do. 19% upside, which beats the market. 13% I'm getting, if you include inflation, on the market. So I can be quite happy to buy this. A 49% upside on the long term. So over the last on the best side of thing, which we are, of course. So that's absolutely fine. Now people were concerned, going, oh dear, it's selling off. Well, we did have some selling, but we've had very, very little selling. And during the last 12 months, insiders have sold a mere 123 million shares. Sorry, $123 million worth of stock. Absolutely nothing. The stock is extremely bullish. That is nothing to be concerned about at all. That is automatic selling. And if I had time for a full review, I would show you who's been selling, and you would see it's not of concern at all. It's just automatic selling. All right, let's have a look. We've just got some latest news 21 hours ago. Applied Materials, revenue above estimates. We've got positive news there. And we've also got positive news. It's a beat. Yeah, we know all of that. It's all fantastic, right? Scrolling on down. Oh, there's my dear friend, Meet Kevin, who just keeps losing money because he keeps betting against the market, telling everybody everything's going down 60%. And he's just constantly losing money. Why he's wearing headphones, I've no idea. I do like to poke the fun at Meet Kevin. He's always doom and gloom. It's absolutely ridiculous. But it sells videos, so good luck to him. It's just not my style. I wanted to share with you here. There we go. The short interest, 1.9% short interest. There's no short interest at all here. 1.9 is absolutely insignificant. So the stock isn't going down. No one's taking the stock down. That's absolutely nothing at all. So there is a brief review. I will put this out later on and do follow-up news should I get it. If you like Applied Materials and you subscribe to my channel, leave me some comments. If you ask me to cover the news, I will cover the news daily for you. I go live 12 hours a day. So there's Applied Materials. Click above my head for all the links down below in the description. I'll give you Alpha Spread and Seeking Alpha, which you can get. I've also just given it to you in the chat, should you wish to do it that way. There you go. And got some comments coming in. I'll look at the comments in a second. Over here, I shall put the earnings for Applied Materials, the edited version, which is exactly the same as the main version. I just improved the audio and cut the bit off before I talk and after I talk. Makes sense? So it's just them, the important stuff. And down here, I will put the playlist for Applied Materials. I've done a full playlist on this, and I keep updating it daily with further information. There you go. Until next time, as always, take care of yourselves and each other. Okay, let me read your comments before I go. I have to focus on the members, of course. Let's have a quick look. What comments do I have? Let's have a quick look. So should I sell as soon as possible? I wouldn't be selling this stock, but I don't know your situation. If the earnings were bad, then the dump would make sense. It makes perfect sense. I've just explained it. It's not dumping. No, it isn't. It's just down a mere ripple. I invest in euros. I invested $1,000 a few months ago. I'm up nearly 40%. I'm not too upset. I should have done puts. I never do options. I think it's a silly game, quite honestly. I like to own the businesses, not play around with bits of paper, bits of contracts. Day trading then, he probably is. I certainly am not. Looks like it's going under $200. I doubt it. Oh, but also I should probably mention to you, if you join Sensei on Sunday, Sensei will do a technical chart for you. If you want to request it, here it is. On the homepage of the channel, here is Sensei's show. Does a show every Sunday, 3 p.m. Central. If you want the full buy zone, sell zone, support levels, all the technicals, ask Sensei on Sunday and he will do it for you. So you might want to join Sensei on Sunday and he will do that for you. All right? Another little thing there you get. So should we just hold or sell? I wouldn't be selling it at all. I have a few questions. Zach's 8, fire away. Just became a member. Justin Sports Card just became a member. Yes, you did. Welcome. I gave you the video, I hope, and you've got all the information now for the membership links and all the rest of it. Okay. I always short the stock when management itself is selling. The management aren't selling. You're making a big mistake there. They've hardly a ripple. That's just automatic selling. Again, if I had time, I'll do a full review and show you. That's nothing at all. That's tax purposes, auto selling, nothing at all. If you're selling on the basis of that and shorting the stock on the basis of that, you're just gambling with on steroids. I don't see any sense doing that, but whatever. Outstanding, said Zach Zate. Thank you very much indeed. You are doing a great job, Martin. Thank you. You're very, very welcome. Thank you very much indeed. Let's have a look. Let me scroll down a bit more. I think vague guidance. What's vague? Long my, the company giving you vague guidance. What do you mean by that? What about the stock? AMAT is a big Crete parts for Intel, and Intel has big competition today. AMAT is a big B Crete. I'm not sure what that means. Sorry, Zach. I'm not reviewing Intel or Clove tonight. I haven't got time. Abdul Vahib, great job, Martin. You are very, very welcome. All right, I've got to get off. I've got to put these videos out. So this will go out as its own video. My reaction will go out as its own video. And earlier on in the show, we had a video, short versus investor. Let me just share with you what's going on in the morning. We've got Candy in the morning. We're covering on the main channel. We're covering Candy, CNDI stock. That's in the morning. On the extra channel, like we were doing tonight, we are also covering an earnings. We do two at once. On the extra channel, we are covering in the morning CINT, CI and T in the morning. So that's two earnings at the same time as we always do. 4 earnings a day plus all the live streams. That's it from me. So what I'm going to do right now, as you are all very much into AI and technology, I am going to end the stream and give you a little gift. And where is it? Let me do this now. Go into here. And we have got coming up soon the biggest event ever on our channel. It is the NVIDIA earnings. We'll be covering it live. So what I'm going to do is send you automatically to the NVIDIA earnings. And you can book your ticket there. You can say hello, leave a comment, a request for a review or whatever you like. So let me just click that button there. It'll automatically take you there as I end the stream. So you can just leave a comment and click like, and you can already have your ticket booked, your reminder set for the earnings for NVIDIA. I'm assuming everybody here would probably be interested in that. It'll certainly have an impact on this stock. There's no question about that. All right, that's it from me. Thank you very much indeed. I'm going to clear the boards, and thank you all very much for joining me on this evening. It's a great pleasure to be here with you. Wide range guidance. I'm not really sure what your comment is. Long Mai, if you'd like to explain it in more detail as a comment to a video, I will reply back to you. I don't quite know what you're saying. Long range guidance. You're asking me what my long range guidance is? That would be a full review. I've just done a brief review. I can't tell without reading more of the margins, the profits, and so on and so forth. But I would certainly say I'm very bullish on the stock, and I wouldn't have a problem with buying the stock. But a long-range guidance, I can't tell you. I didn't do enough of a study on that stock. It was like a 15-minute analysis. That's not enough. I'd want to spend at least 2 hours to be able to establish that number for you. All right, that's it. Become a member and I can do a full review for you. Right, I've got to go. That's it. I'll see you back in the morning. I'll take you now directly to the NVIDIA earnings. Thank you very much. Have a wonderful evening. And as always, take care of yourselves and each other.